News of the Arrow Energy takeover bid came on the same day BHP Billiton confirmed it had reached short-term pricing deals with its major coal customers, a move seen as breaking the mould of annual pricing. The quarterly coal deal is also seen by some as paving the way for the future of iron ore pricing. To look at the latest developments in bulk commodities and the energy sector, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Ali.
If we can start with that quarterly pricing agreement for coal with BHP Billiton, does it mark the beginning of the end for annual contracts?
I think it's actually becoming a little bit more realistic. Remember, a lot of these things have been, this form of pricing has been around for close to 40 years. And it really doesn't provide that latitude for either the producer or the consumer to take advantage of medium-term fluctuations. So I tend to agree that it's probably towards the end of this type of pricing, and we're going to move to more flexible pricing for a lot of these bulk commodities.
That said, traditionally the smaller players have followed the likes of BHP Billiton, but there does seem to be genuine concern that if the move is to quarterly pricing, is there enough accurate pricing data? Is there enough of a coal index to provide the guidance?
I think this is all part of the way the machinations towards how pricing evolves. Yes, I think there is enough. There'll be obviously a few flagship deals which will allow us to put that pricing. But remember, this commodity will move and shake in terms of supply and demand and what's happening in the economy. So I think people will be able to judge the supply and demand and also judge what fair pricing is at more of a closer date rather than trying to look at it annually.
So what happens with the next round of negotiations? Because I note that the Japanese want to resume annual negotiations from July, and it does seem that some producers, for example in the US, are prepared to sign annual contracts. Who wins next time round?
Look, I think in any change, I think it will take a little bit of time. Remember, once you've fixed a price, that's pretty much it for the whole year. And if you see what BHP's done, they've said, OK, let's move to quarterly, let's be a little bit more flexible and see what the consumer wants. Remember, BHP can also take advantage of higher prices throughout the year by offering those quarterly ones, and also the consumer can decide if they want to have an annual, they can. So I think the flexible pricing is where we want to end up, and given the opportunity for consumers and producers to take whatever contract suits their own balance sheet.
And what about iron ore? Of course, those key iron ore price negotiations are going on at the moment. Do you think, as some have said, that this coal deal paves the way for shorter-term deals with iron ore?
Oh, look, it must do. I think, once again, Ali, we need this flexibility within these pricing structures, which is good for consumers and producers. And I think with iron ore, I think that the Chinese are certainly holding out for it. Remember, last year we had a big problem in trying to negotiate prices. So I think this does pave the way for continued development of more flexible conditions.
Well, in terms of where those negotiations are up to right now, we've seen a range of reports out of various places, I guess, in recent days. We've got reports saying the Chinese steel mills are prepared to accept a 50% price increase. We've got other reports saying, well, in fact, the producers are seeking more like 70% or 80%. What's your best bet?
Well, I think this is where things broke down last year, where the consumers weren't willing to pay up. Look, I think the 50% is probably where the money is at the moment. I think that's certainly a good hike, and I think, given that we've still got a certain amount of uncertainty out there, I think I'd be looking at that 50 to 60%.
It's not a buyer's market, though, is it?
It's a seller's market at the moment, there's no doubt about it.
And is it right, though, that the higher the benchmark price starts to look, the more chance that the likes of BHP Billiton have got of trying to persuade the Chinese to go to shorter-term contracts?
Yes, it does. But once again, it's sort of, you're talking about flexibility because and the needs to how the economies evolve over that full 12 months. BHP would like to go short-term, mainly because if we do get a sudden burst of interest, then they're not locked into those long-term prices. If China really starts to push on in terms of its demand, then they will have to pay the new market price and not the 12-month. So overall, I think it's a negotiable thing, but it just brings us back to where commodities should be traded. It should be optional for either the consumer or the producer to decide whether they want to be a fixed contract, a spot contract, or more of a quarterly contract.
Let's have a look at this takeover bid, $3 billion takeover bid by Shell and PetroChina for Arrow Energy in the coal seam gas sector. Before we actually look at the bid itself, what does it say about confidence in coal seam gas as a real energy source for the future?
Ali, it's all about confidence and all about alternative energy sources. And when you look at this particular deal, it's right for Shell, it's right for PetroChina to look at this, because once again it's another form of energy which I think will be exploited if in fact the price of traditional energy, oil, starts to move higher, which at the moment it looks like it is appearing to trend higher, even in the wake of what we're seeing economically. I think it's a well-placed manoeuvre by the two. Secures things for PetroChina, and for Shell it helps to diversify them.
Of course, it's not China's first move in this sector in this country. It's its second one. But is PetroChina likely to run into political hurdles, particularly given the Australian government's guidelines on investment by sovereign wealth funds?
I think it will. I think they'll look at each deal on a piece by piece. And I think this deal does make sense for all the players concerned. And I think this is where it's slightly different, because Arrow get a good benefit out of it in terms of helping the funding for fishermen. Shell gets something out of it, and PetroChina gets something out of it in terms of certainty of commodity. So I think if the government looks at this, they can see that all parties, that's if in fact it goes to that next level, that all parties will win out of it, and I think that's the most important thing.
You say if in fact it goes to the next level. We heard in the previous story that perhaps there wasn't enough money on the table. Would you think that that's probably right? They're going to have to stump up some more cash?
I think that they might just have to stump up a little bit more. It just makes sense, but like all these things, it's the first one, and I think given the future where we're looking at energy, China and India, and where we're going, I think they will have to pay up a little bit more for it.
Jonathan Barratt, once again, thanks for your insights.
Thanks, Alan.